What's up, everybody? This is Chris on Fins TV from BuyOnTheDip.com. I'm here with Corey from Afraid to Trade. So Corey, why were you or why are you afraid to trade?
Well, I think you lose money. And so if you do that enough times, or if you have a position where you know it's going to go up and it doesn't go up, so you're going to take your stop loss, but you don't take your stop loss as you should, and you kind of get your confidence shattered. So enough of those examples leads you to a fear mentality. And so the only way to overcome that is by smaller positions, knowing kind of psychology of trading, ways to get motivated and ways to deal with that process. So really just kind of being certain on something, like a news report. So I think for me it was a magazine article that said this stock here's going to go whatever, and bought into it and take a stop, bought a larger position than I should have, and I kind of blew out that more than I expected. So more so it just happens. I think like happens to a lot of people. So it's how you deal with that, you overcome that essentially. Strategies and those sort of things.
All right, Corey, you do a lot of technical chart patterns. So what is your favorite pattern for a beginner?
Flat. If you're looking to see an initial impulse, you can't really predict an impulse, but what you can do is look at the movement down. So maybe it comes to the Fibonacci, maybe it comes to the moving averages, maybe it's an Elliott, whatever the case is. And it's not so much the main ideas about what happens. As you see that impulse, you see a simple retracement back, and you're going to trade that move up. It's usually a measured move, so you know your stop is going to be placed. You know your target's going to be moved. You can measure move with that first impulse, add it to the bottom of the retracement, and so that's your target. So it works more than not. It's a classical pattern, and when it works, you get sometimes 2 or 3 times your reward, your risk. So you have an R value multiple, or maybe you get $1,000 when you win, and if you lose, then it'll be your stop out. So you have accuracy and monetary goals. So it's a pattern, easy to recognize, easy to go back and document, and fun to trade. Happens a lot.
We've got a few questions here from folks on Twitter, and the first one comes from Gawad, aka God. He asks, just what are your routines and some of your favorite indicators for the morning for trading, preparing?
I trade most in the morning session, and so I'm looking at the gap. If there is a gap, I decide whether to fade it or to go with it, depending on the size of it. So larger gaps or more percentage gaps might not fill. So they may be precursors to a trend day. And trend day is where I'm most aggressive. You're going to be buying most pullbacks. The risk is controlled in terms of where support and the moving averages or resistance. So I'm looking initially at the gap if there is one. Indicators, overnight range, maybe looking at higher time frames from the daily chart, setting the bias up, and kind of playing that bias out in the lower time frame charts, mostly for me 5 minutes, and also confluence of 1 minute. So I guess it's the way volume, looking at the pair volume today's open in the first 30 minutes with prior volume. So if today's volume is much higher or lower, I want this important to do. Indicators I use moving average of 20, 50, EMA, 200 SMA, and Bollinger Bands, 3 regional oscillators, and some modified MACD, and volume, price, patterns.
Is there any favorite setup that you're looking for when you walk in and sit at the desk?
Gaps. Love gaps. Yeah, absolutely. Not huge gaps. Gaps less than certain on the S&P or the Dow.
Do you usually fade the gaps looking for them to retrace, or you, like you previously said, looking
I prefer those. I like to have an exact target and exact stop. So I like anything with a precision. I like to be kind of a precise trader using those. I prefer to fade a gap than to go with it because you don't exactly know where your target is. You get the point that way, but you can't really put your risk management profile where your stop's going to go, which that's pretty good. But where your target is. Gap fills are easier for that. You know where your exit is, and that's where it's closed. And your stop will be whatever your parameters say for it to be. It's easier.
It's more defined that way.
Well, it's defined.
I like it. Good.
Website is afraidtotrade.com. Most popularly is a blog, so it's blog.afraidtotrade.com, and it's a daily blog. And enjoy having you reading. Thank you.